Hi, and welcome again to the how-to series on COVID recovery presented by the Manningham Business Network. This series of webinars is brought to you in conjunction with the State Government of Victoria, and we are very grateful for their assistance in helping us get this project up and running successfully. Now, the focus of this series is to enable business owners and managers to have the tools they need to get back into business successfully, remain safe, and continue to operate in a manner that's compliant with any COVID restrictions in force at that time. Now, our key purpose in these webinars is to engage, reinvigorate, and collaborate with all businesses within the Manningham area. Now, today's presenter is Damian Scodella, the founder and head of business development of Square Penny. And Damian spent more than 20 years gaining invaluable experience in the areas of manufacturing, accounting, financial management, business strategy, and operations. And he's worked with large corporates as well as family-owned businesses. He really enjoys providing solutions to general business problems and coming up with new ideas to implement in businesses. And I also hear he has a golden rule, a fascinating golden rule, which is that you can't live more than 20 minutes from your workplace. Oh, sounds like a dream. Now, this session is being recorded, and the recording will be available within a very short time on both the Manningham Business Network website as well as their YouTube channel. And although we won't be taking questions during the recording, for those that are attending live, Damian is able to stay on the line for a short while afterwards and hear your comments and questions then. So have your pen and paper ready, because I've had a preview of Damian's presentation and it is chock full of information. We're in for quite an informative session, I'm sure, and it's with pleasure I hand over to you now, Damian.
Thank you, Sandy. Much appreciated. Well, welcome everybody. The world of finance is quite broad, and today I'd like to share some insights in relation to reporting and financial analysis. What are these reports telling you? And there's lots of information within our financial reports, and we'll go through some of that information today. So the key for today will be what differences of the type of financial reports are available, key financial drivers, some hints to look at in relation to understanding your information in your own businesses. And we'll go through an example of how powerful financial reporting can be for a retailer who starts to implement some of these reporting. If we focus on the three key financial reports that we have to run our businesses. Now, all businesses are at different stages in their journey. Startups, mature, growth businesses, and then mature businesses. The three key financial reports, and I'm sure everyone has heard these: the cash flow, the balance sheet, and the profit and loss. Now, they're all linked, yet they're all separate. And I'll go through each individual one in a little bit more detail. So the cash flow. This is the real amount of funds that have been used for the business or for personal needs. What the cash flow fundamentally provides you is the ability to pay your bills when they fall due. The key to most businesses is making sure you have plenty of cash in the bank to be able to pay your bills, pay your statutory obligations, and maintain enough working capital for the growth of the business. Some may say that the cash flow is the lifeblood of businesses. It certainly is one of the key elements, particularly in the past 12 months, that a lot of businesses have required to seek further funding from financiers to help their business flow. And I'll come back to that a little bit more as we go through the presentation. The profit and loss. This is whether you're making money or not. Or you can also see whether you're charging enough for your services or not, as well as seeing how much money you spend. So fundamentally, the profit and loss effectively is how much income I earn, how much money I have spent on bills, and the difference between those tells me whether I'm making money or not. And if you are making money, then the difference between your revenue and your expenses provides you enough cash to help you with other obligations. Once again, we'll come back to those when we start going through the presentation, and we'll link back to these ongoing. One of the key reports that's probably underestimated in business is the balance sheet. Sometimes it's a lot more complex for businesses, but fundamentally in a balance sheet is where you have your assets and you have your liabilities, what I own and what I owe. And the difference between those two really provides you the business worth. A lot of businesses tend not to look at their balance sheet, but is one of the key fundamentals when you're looking at selling your business, because it really tells you how healthy your business can be. Great. So that's the introduction to the 3 key financial reports, and we'll link back through those back through the presentation as we go. Now, some of the key financial drivers in our business are generally our wages that we pay staff, our gross margin that we make, and gross margin can be described as revenue minus your costs to manufacture, to make, to service, and generally that will provide you gross margin, and that is one of the key elements. Then you've got your overheads, rent, stationery, marketing material, a whole bunch of expenditure items that fit within overheads. Then you've got a key rental percentage, and then you have inventory turnover if you're an inventory-based business. If you're not an inventory-based business or you're a service provider, generally the two businesses are different. But these are the key elements. The key elements, and the reason I say that these are the key elements, because these are the major drivers in all businesses. How many staff you have, how much money you're spending on your overheads, and how much money you're spending in rent. That's from the expenditure side of things. The gross margin provides us the information around whether we are making money on the products that we are selling. And if we aren't making money on the products we're selling, that means we don't have enough money to pay wages or overheads or our rent. And that's what's important when looking at what are the key financial drivers of your business. You may have some unique drivers in your business. For example, in people-based businesses, there is employee utilization, that employee profitability. In an inventory-based business, it might be the margin that you make on your product or the markup that you make on your product. They are key drivers in every business. So understanding what the key drivers in your business is imperative to understand how to improve that information and how to understand that information moving forward. So one of the key things are now starting to drill down on your information within your business. So one of the key questions is, where does business spend their money? And as I indicated before, what are the specific drivers in your business? Now, I can only give you an example from a service-based business. One of the key drivers is people, getting people from A to B. So there's transportation costs. There is hourly rates. And understanding what that specific driver in your business is one of the key elements to understanding your profitability. Once you have your financial reports, particularly the profit and loss, you need to drill down on your overheads and review the costs versus benefit. Now, some businesses are spending money in marketing, yet not understanding what their returns are in marketing. Obviously, we have Google, we have other social media, Instagram, clearly Google ads, Facebook ads. Understanding where you're spending your money and why you're spending your money and what the benefits are is one of the critical aspects of understanding your financial reports. Because if we're not understanding that, then we shouldn't be spending money in those areas, or we need to be asking more questions as to the benefit. When we're talking about marketing spend, it is a very ambiguous area. You could be spending money to build your brand, or you could be spending money on delivering sales. Understanding the two different levers and understanding How to get that information is the key to that overhead expenditure. Many businesses tend not to worry about the smaller stuff: telephones, electricity, gas, water, printing and stationery. It's just as imperative to ensure that those areas are also covered off as well. Doing the analysis, understanding that what that expenditure is in those areas is very easy to drive and improve costs in those areas. You need to also review your sales. There's a general rule of, where does 80% of your sales come from? Generally, that drives the information. That drives where the majority of your sales are coming from. We tend to spend a lot of time on the 20% of the sales, and it ends up taking 80% of our time. Instead, we need to be focused our time on 80% of the sales and focusing 80% of our time in that area. So do the quick analysis, or if you're not sure, reach out and ask the question, and that will help drive you where your information comes from. It's also important to analyze your customer profitability, analyze your product profitability, and your employee profitability. It really depends on the business that you're in, what to focus on. If you sell products, then understanding their profitability. If you use employees to sell services, it's understanding the profitability of the employees. They're critical areas. They are further reports that help you drill down, which feed into the profit and loss to help you understand your business a lot more. Once you have the information, then you can seek advice to help improve that information on how to obtain that improvement in that area, or help or eliminate some expenditure in that area. It's really imperative that you have that information available at hand so you can actually do something with that data. Some of the other aspects of reporting: debtors. Now, debtor is our customers. It's imperative that when we send an invoice to a customer, that we collect that money from that customer. There's no point making a sale if a customer doesn't pay, because it's not really a sale when it's reported in your profit and loss. So make sure when you invoice a customer, you collect that money. It's important, if you're on 7-day terms or 14-day terms or 30-day terms, that you collect that money in that time frame. It is much easier to collect money in the right time frame instead of letting that time frame blow out. Also, I encourage you, particularly in these times, to really work with your customers. If your customers are struggling for cash, work out a payment plan. It is better to have your money coming in instead of waiting, hoping situations change. Accept a smaller amount over a longer period of time. It still works out to be the same, and you're not creating yourself any problems moving forward. The creditors are also our suppliers. Now, it's also always important to pay your suppliers on time. But once again, if you're needing some support or relief because you can't pay your creditors, be proactive. Go to your suppliers, but come up with a payment plan with your suppliers, and feel free to make regular payments over the long period of time. What I've learned over the journey is that the more you communicate with your customers and the more you communicate with your suppliers, they will support you in the tough times, and that's where you always require that support. When you're growing, you also require support. So communicate to them, support them by providing them the information, because they are also going through the same scenarios as we are in business. Now, the ATO has got its standard benchmarks. Now, unfortunately, the ATO, the data that they provide is actually a couple of years old. They don't release their information for a couple of years. So, for example, there is the web address that you can actually find the small business benchmarks. And this comes down to comparing benchmarks across industry compared to the industry that you're in. So let's go to that. So these are the benchmarks from the 2017-2018 year. Now, given that we've just finished the 2021 financial year, some may say that it's not relevant, but I suggest that it's still a very good guide to understand how your business is traveling. Now, you can see the key benchmarks there in ranges of turnover. So the first benchmark is turnover of 65,000 to 400,000. And they provide certain percentages of what they think cost structure should be. So let's go to the first column and the first line. Cost of sales. The ATO, amongst the whole data that they've collected from every small business in that range, suggests that your cost of sales should be between 30 and 36%. That's fantastic. Then what we would go and do, you'd go and look at your financial reports and do the calculation. And if you sat in that benchmark, great. Tick the box. If you're sitting outside of that benchmark, you then need to start to ask some questions around, are your costs too high? The average cost of sale is 33%. So they've given you a band, but they come up with an average of 33. Now, if you go to the next bracket between 400 and 750, once again, it's 33%. But when you get to over $750,000, the average cost of sale comes down to 30%. Some may say as you get larger, you become more efficient and your costs come down. When you look at that next line, the total expenses, they have ranges there between 73 and 82% if you're in the first band. And if you go to the last band, you're between 87 and 93% when your turnover is more than $750,000. Now, please take this into account. The cost of sales is embedded within the total expenses line. So if our total expenses were 87%, you would need to deduct the 27% in that $750,000 column, and you would be provided with expenses or overheads of 60%. Now, this is where you need to start to drive that information and understand how your benchmarks work with the ATO benchmarks. Now, there are further benchmark ranges that the ATO also provide, once again, still in the 2017-18 year. And although it's 3 years old, it does provide us that information and some integrity around how our business is set up. And you can see here, there's 3 other key areas: labour or wages turnover, rent turnover, and motor vehicle expenditure. Now, these are 3 areas that the ATO also focuses on when they're looking at auditing to make sure people stay within these ranges. But there's also other areas relating to ATO audits as well that you need to seek advice from your tax agent. But generally, if we look at the $750,000 column, labour turnovers between 29 and 36%, rent turnovers between 5 and 9, and motor vehicle costs are about 1%. So the key out of this is take your information, compare it to the standard benchmarks, and if you're outside of the range, then you need to start asking questions. If you're inside the range, once again, still need to understand how you can drive your costs lower is one of the key elements. So I want to go through some examples of reports that we have built over a period of time that provide the information. Generally, business owners have started businesses, they've had a great product, but probably haven't spent enough time on finance and financial reporting. So sometimes the key is presenting the reports in a manner that is readable and understandable. And here are a couple of examples of that. If we have a look in this report, generally we always want to compare between periods. So I always want to compare either what my financial numbers are this year compared to last year, or you can compare it to a budget. But I kind of always like to think, I want to see if I've improved from last year, if I've progressed forward, or have I gone backwards. So if we have a look at the year-to-date column, which is on the right-hand side, and we have a look at the first line, the income line. Now we can see actual income of 10.994 million, versus last year's income of 5.6 million. Now, if you compare the two numbers, the variance there is 5.3 million. Great, we've had a fantastic year, and we've added 5 million to the top line. If you have a look at the cost of goods, this year's cost of goods was 7.6 million versus cost of goods of 4.1 million last year. When you look at the margin, 3.3 million versus 1.1 million. We've increased, all driven by the increase in income. Now, you can certainly drill down further on that information to understand the percentage gains and percentage differences, because that's always the key to understand whether you're actually growing or not, or your margins have been eroded. And conversely, we'd also do the same for the month. So if you have a look at the month, income 1 million versus income last year of just under 400,000. Expenses 232,000 versus last year 129,000. So what I'd like to see always is the month and the year to date, and always comparing against a reference point. Generally, the easiest is last year, unless you have a sophisticated business and you're setting up budgets and going through that detail. Then what we like to do is plot it on a graph and really see how it all transpires. And you can see on the graph we've put in a couple of years there. In blue line is 2018-19, the 2017-18 line, which is in the orange, and we've also put a forecast there in green. Now, what we'd like to report on, we're reporting on cost of sales, but you can report on anything, and you can make it look graphical to give you an understanding whether your trends are going up or your trends are going down. And the most important thing is that if the trend is going up, you're doing the right things. And if obviously if the trend is going down, then there's areas of the business that we need to understand and we need to look at. And also in the box on the right hand side there, it's just some key elements to understand the key drivers of the business. We've put year-to-date income and year-to-date profit, and this business is driven by volume. That's why we've got tons in there. So it's really whatever the particular drivers are in your business, you want to know and you want to report on. Now, another report is a gross margin or a contribution report, and this business here has a particular margin that we calculate around labour. So you can see on the fourth column, total build, total labour costs, the margin, and then margin percentage. So these are all our customers that we are reviewing. So customer A has got a margin percentage of 25%. When you look at customer M for Mary, that customer has a margin of 15%. So this provides a customer analysis around each customer's profitability and whether there are drivers particularly driving the more poorer performing customers compared to the higher performing customers. And if you have a look at those customers in red, customer C, their margin's 20%. Customer E, their margin's 19%. So the key out of this information here is understanding your customers and your customer profitability and where to focus on, when to go and talk to your customer about trying to increase their costs, your revenue with them, or trying to work another way of you reducing your cost to improve your margin. But without the information, then generally you can't have that conversation. So the information is available. Seek the experts to help you drive that information in your business, and you'll understand your business a lot further. One of the other key elements in business is also having a resource plan around the business. Now, every business is uniquely the same, but generally it's different in its delivery model to a customer. Depends on how you sell and how you deliver. That's generally the difference, but everything else is the same. We all have insurance costs. We all need an external tax agent. We all need a bookkeeper, whether that's an internal bookkeeper or an external bookkeeper. We all generally have staff, so we need some HR support. We all need marketing. We all have software to function our businesses these days. Without software, it's very difficult to deliver. From time to time, we have legal issues, so we need to lean on some legal people. From time to time, we want to really drive our growth, so we need to lean on finance, on external finance, and depending on where our business is in terms of growth or maturity stage, we always need a strategic partner to help us. So if your business is in the middle and you're not surrounded by the relevant service providers around you, go out and go and seek them, because in business, we need them from time to time, and they do provide guidance and support to us whenever we need them. Now, you don't always need finance or legal support, but when you do need it, it is on, and you do require it. So go and seek it out, because it really is support that you need in business when you need it in business. Now, I wanted to talk about a further example that we've experienced with a customer over the journey. And I like to think that the power of information really shines through in this example. Now, they're a retailer. They're a family-run business, over 30 staff, but they were very unsure of their financial situation. They didn't quite understand how much inventory they had. They didn't understand the cost of their labour. Their compliance wasn't smooth. And one of the elements of what we went and provided this customer was understanding their expenditure. So we provided the reports in order for them to understand their business, for them to understand what their cost of sales was, for them to understand wages percentage, rental percentage. They weren't quite structured. So when they were going through a month, the month would start on month 1 and the month would end on day 30 or day 31. And it was taking 30, 60 days to provide financial information. What was critical to the business is providing that information in a shorter time frame, so they could make better decisions. So for this business, they're getting their reporting on day 7 of the new month for the previous month. What that allows them to do is understand their information from the previous month and be able to make change within the following month to be able to see that change in the balance of the year. So with reporting, timely information is the key. There is no point having information 6-9 months later after the fact, because it's too difficult to turn the boat, turn back and make the change. You want to really speed up the process of receiving that information so you can make decisions better. All businesses have compliance issues now: BAS, payroll tax, work cover obligations. So understanding that information as well, shortening the time frame and understanding when they are due, so you can review and improve, is always the key. And that was the key in this example as well. And one of the final pieces of the puzzle for any finance in a business is making sure you have robust processes and procedures. Know and understand what the process is and what the procedure is to do a specific task. It is the key. It's the key to, if someone should resign, it's the key to have that information available. Or if you're growing and you need to employ someone, they can pick up that information and be able to provide that information ongoing to the business. But overall, information here is reporting and understanding does provide clarity, and it can also give peace of mind. I've seen many examples over my time, business owners not sleeping, but once they have information, they become a lot more relaxed and start to understand and be able to focus the information, and once again, sleep a little better. Now, there's many systems, many softwares out in the marketplace that provide various types of reporting. Most of us would know Mile and Xero. There are some more specific reporting software, more specific softwares. JobPack in the construction industry, Levisis in the electrical industry, Arlo in plumbing, BuildExact in building. But there's some other softwares there as well. One of two key softwares, HubDoc and ReceiptBank. They also provide our ability to take a photo and feed that receipt through any financial systems. You've also got another product, HR Central, which also provides an online platform for HR employees to obtain information. There's also Workflow Max as well. Some reporting softwares called Fathom, Spotlight, Futurely, Sift are all softwares that report on your profit and loss, or your cash flow, or your balance sheet, and they overlay either a Xero or a MyOb software. They can be beneficial, but you need to do your research in that area. But I tend to fall back to Excel. It's been proven over 30 years. The skill set that you need in Excel is quite broad and diverse, so you can bring someone that has that skill in Excel to develop this reporting for you. And I tend to always go back to that because it does provide you the flexibility that some of the other reporting doesn't. So thank you, everyone. Thanks for listening today on a topic that can be a little bit dull and boring, but hopefully I've shared some information with you that triggers some elements to want more information out of your business. And I look forward to talking to you next time.
Well, Damian, I'm one of these people that, my eyes kind of gloss over when somebody starts showing me profit and loss reports and things like that. One of the things that really struck me that you said was information can give you peace of mind. And that resonated with me very strongly, because there are times when I've kind of avoided this stuff I don't like, avoided looking at some of the digging deep into my financials of my business, and all that does is prolong my agony, if you like. So information gives you peace of mind. Damian, thank you so much. You're incredibly knowledgeable. And I encourage anyone watching this live or watching the recording of this webinar to go to your website, because when I had a browse around there, it was so clearly evident to me that you have really been very successful in building a strong business over the many years. And the culture of your business is very evident in the website as well. To finish off, I would like to thank again Damian for sharing his time and his insights and his wisdom during this webinar. I'd like to thank all of you who are attending live. And we particularly want to thank the Victorian State Government, who have helped us get this project up and running successfully. And without their support, we simply could not have done this. And a big thank you too to all the members of the Manningham Business Network and the hard-working committee members who are serving the network so very well. So for now, it's goodbye from me, and we look forward to see you in the next webinar in our How To series.